Good morning. Welcome to Critical Point Podcasts. It is Tuesday, May 26th at 7:45 a.m. Central Time, and this is Rich Pawson. Now, we're going to look at the stock market this morning. We're using the S&P 500 mini futures as a proxy to cash and proxy to the entire stock market. Let's look at this weekly chart and look at some of the bigger trends during the year. I think this is now becoming more important than what we're doing short term, and I'll probably show a little less short term than what I've been doing. At any rate, major level 1 bottom, and you may recall back then we were unsure whether it would be level 2, level 1. If it was level 2, then we were at risk of more downside. Well, this has rallied far enough, long enough. I'm just saying it absolutely was a level 1, okay? Which means it's also the first opportunity for a long-term bottom, but only the first opportunity. At any rate, we've had a level 1 uptrend that is going to top out week of June 8th on into week of July 6th, sometime during that time frame, okay? Now, I've learned in greater detail, it is possible to top out 1 week earlier, so it could top out basically any time in June, and the model might be running a little late on its earliest, so we want to watch out for that, because as we look at the weekly stochastic, it turned overbought, turned to a sell signal, returned to a buy signal. It's currently at a lower level, even though the stock market's higher. What this means is it's losing momentum. This is a inharmonious action with the potential to be a negative divergence. A negative divergence would be when the indicator returns to sell signal, put in a lower high than the price, and the price came down. It increases odds of an important top. Now, of course, it depends what trend you're studying when I say important top. Maybe it's better to just say increases the odds of a top. Okay, now, so the level 1 buyer has been buying all along, even though they hesitated for a few weeks in April and early May, and then they just continued to buy. Inside of that, or I should say correlating with it, are the level 2 traders that bought and then sold, but they were rather diversified. They weren't all in agreement on the same page at the same time. They were not aggressive enough sellers, and it's quite possible they were selling into the level 1 trader who was providing some support. Now, last week we got evidence, at least technical evidence, that the level 2 trader had returned. They were giving up. They had tried to make something of the downside. They were giving up and rejoining the level 1 trader on the buy side. Now, why are they buying this week for such a nice start this week? It has, again, to do with various drug news and potential vaccine that's now going to be tested. It also has to do with the opening of the economy. This has been the number one narrative, in my opinion, for this latest part of this uptrend, is the opening of the economy. Now, there's still risks and things that go wrong for opening up the economy the way we have this soon, because we're seeing rising cases, rising deaths in various regions of the country. And we're seeing some complications like that in some countries around the world. And then we have Brazil now, that's the new epicenter. I think they're the second highest in the world of problems, and can just see they've really ignored being decent and scientific and medical and dealing and work with that, and I think it's coming back to bite them. At any rate, we have some upside objectives for the S&P 500 that were met as of this week already in, say, around the 2970s area and higher, and this particular type objective goes up to about 3041, so we may yet see him punch it through to 3000, okay? And we may yet see them get it above that 200-day average, and that might actually excite them to push it even more as they find another technical level that has been violated. Now, there are other objectives that can range as high as, say, 3275 or so, which is getting close to this bearish breakdown gap near the record high, near the beginning of this bear market, or at least this level 1 downtrend, okay? So the bottom line here is there's plenty of upside objectives. It's just, as always, the higher you set an objective, the lower the probability. We don't know if it's really going there, but with this kind of momentum pace, it could actually do this with the amount of time for this level 1 top. Now, what's going to occur when this level 1 tops? Well, the model over the weekend actually went ahead and took a stab of an early projection and may adjust this perhaps later rather than earlier. But what it's showing is sometime in July going into early August, we'll have a level 1 bottom. Okay, now the level 1 is the most important kind of trend during the year. It's usually the longest and it has the greatest amount of price change, and it's a bit more reliable than the level 2. As you may recall, I was looking for the level 2 top, wanted to pull back. I said it could be dramatic, large, and over time I started backing out of some of those lowest objectives. And the point is, it doesn't work as often as the level 1. So with level 2 not working, basically just being a hesitation, nothing to really trade, now looks like it's nothing to get excited about, even though we certainly had some negative news that could have become worse. At any rate, normally that will increase the odds of level 1 working. We could have a dramatic move. By some technical retracements, this market can return back to the 2400s off of this level 1, but it might only return back to, say, around 2800. So I'm going to probably go with 2800 as a minimum downside objective, and I don't know. Sometimes this is like a box of chocolates that, yeah, you may know very well what type of trend it is, but you're looking at a range of performance. And so you know it's a box of chocolates, and you even know what types of chocolates are in it. It's mixed chocolates, but you're going to reach in without actually looking at it and not sure what you will actually grab as that chocolate, okay? And so I still find that very valuable, and I find it as a more mature way of looking at it because there is no precision in the markets. It just appears that way sometimes. It's coincidence and luck when it gets to precision. The market is a fuzzy logic system, and the best we can do is get to ranges, and sometimes we're able to throw a dart and nail it. Okay. What's going to occur on the way up into this level 1 top? Well, ideally, it's due for a level 3 bottom, and I'm not going to show you on the daily chart. I'm not going to use the intraday this time around. Perhaps I'll give you some updates along the day, but I think we'll worry about more detailed as the week develops. But ideally, this should turn into a negative reversal. They should actually sellers. They're going to have a gap opening on the cash market, but gaps don't matter to cash market. Cash market follows derivatives. Derivatives are king. That's all there is to it, okay? Now, the thing is, it should turn lower this week, but it may only come down to this trend line to around 2,900 and then just go higher for the next level 3 up move. Level 3s are your pops and drops on this weekly chart, and on a daily, they do look more dramatic and useful, but they don't work quite as well as many other markets and, say, commodity markets. Okay, sometimes the stock market can just shrug it off, not pay much attention to it. But at any rate, ideally, we're going to see some selling sometime this week, and it may not bottom to next week, so it's possible they don't sell to towards the end of the week and then early next. Put that level 3 bottom in and goes higher, okay? So I think we need at least one more leg higher here from the level 3, and that level 3 buyer at some point is going to say, I've had enough, I want to bet on the downside, and I think I'm going to bet even more than normal. And they're going to get lucky in the sense it's going to coincide with a level 2 trader who's going to say, I think I'm going to take a chance again backing out of this. And then it'll also be the first opportunity for level 1 traders saying, I think I'm going to back out of it. Well, now we've got a majority of the market. We probably got 80% of the market on the same page of wanting to sell for some reason or another. And it may be new fundamental data that's bearish. It may be just a news event that just spooks them and then they overreact and then it lasts longer than what you might think to that overreaction. So it doesn't have to be your standard fundamental information, okay? It could be technical trading if it's just with a lack of any new bullish information, okay? It could be all sorts of scenarios. At any rate, I've given you some upside possibilities here. I'm concerned that it's really not going to go much above the 3,000. Maybe it can get into that 31, 3,200 area, but I think it's going to probably stop shy of 3,100 just because of this potential overbought again, but negative divergence, meaning it's even more bought than it looks like, okay? So I think I'm concerned of chasing after this market right now. Problem is we've got, 4 or 5 weeks this could trend higher? This could be a big mistake on my part. These higher objectives getting all the way up near the record high could be valid, all right? And the NASDAQ has been the leader, so watch that one. And it's much higher. It's blowing through many technical headwinds. Yes, indeed, this could be more bullish than I believe. At any rate, I still think there's a little bit of a setback coming here in the next few days. Another leg higher. I think we'll take it one step at a time, but I do want to look out for this kind of a top coming, that we got a major setback for perhaps another long-term buy opportunity, at least for a level 1 trading opportunity. Don't have much else for you on the news here. We got to get the week started here after a long holiday. I don't like what I see in the virus stuff, my virus modeling, which is really too short-term to be useful, but it's interesting that it's working. I'm a little concerned. Everybody's getting too crazy, going out to the beaches, going out in public groups. I'm not so concerned with people going back to work and just shopping in stores so much. It seems when I'm out, I'm seeing a respect of social distancing. I'm seeing at least half the people wearing masks and respect for wearing masks. Need a lot more of that, though. But when they get into these big groups, at bars and at public entertainment type events and the beaches, that's insane, okay? And they're not being respectful. And no, that's not freedom. And even if it was, you don't need that kind of freedom. Sorry, that's the way I go with it. So we could still get a second wave here that's created by the morons, all right? Just that simple. This virus is so much different. I'm not convinced we're going to see a seasonal decline at all. I think it stays with us right on into the fall and then gets worse yet again. And it may not be worse than what we just recently seen, but I think this is going to be around for a while. Meanwhile, we have all the after effects in our economy. We have the government programs that really aren't trickling through and working enough yet. Nevertheless, I'm still optimistic that we have a minor long-term bull market coming in the next 2 or 3 years. We have a major long-term bull market coming all the way to the year 2028 to 2031. I still have my too small of a core long-term bullish position. I'm going to hang on and ride it all the way back to the March low if I have to. My problem now is how do I get on board more? I actually dumped another increment of long-term plus all my intermediate here. Now I'm stuck with maybe having to put maybe half that position back on, try to make a little in the next few weeks. But I really hate to add more long-term here. I think you just have to have close stops and be willing to give up if you're doing that kind of thing. I'd like to see what I get by July and August. But the problem is, if this thing were ever to rally to 3,300, maybe by the time you get to level and bottom, it's no lower than we are now and maybe a little bit higher. And you're still going to wind up chasing the market. You're going to wish you'd got going sooner. So it's never easy, folks, always difficult. But the bottom line here is I think we're starting to approach a little more downside than upside. We're starting to approach a risk of one of the more significant setbacks during the year, but we could still be 4 weeks away from it. And this thing is looking strong to me, although it's overbought. Hopefully this makes some sense. And we'll see how the week develops. But like I say, I want to be L3 short term, which is monthly, intra-month bearish at some point here. But you got to be bullish, at least for the first thing this morning. By the way, that level 3 trend can top today, okay? But it's the earliest. And then I want to be bearish down the road for these bigger trends. I just can't tell you, do we have another 3 or 4 weeks of up? And how high? But at least we got some guidelines, some ideas. And we know the market's overbought. We know it can set back into July almost at any time here. But I think it's probably going to hold up and wrap up this particular month. As always, manage your risk relative to analysis of others and your own. Thank you, and let's have a good week trading.